Okay, so you want to run a pub. Get the tenancy or the freehold. Keep the beer flowing, build a loyal following, and run one of the oldest, most culturally embedded institutions in the entire country. That is the plan in your head. But here's the question almost nobody asks before they actually sign the lease. Which kind of pub are you actually running? Because a pub in a small English village and a pub on a busy city high street are, underneath the shared name and the shared pint glasses, genuinely different businesses, facing genuinely different risks, and surviving, when they survive at all, through genuinely different mechanisms. Picture two pubs on the exact same Friday evening. One, a quiet stone building at the center of a village of 800 people. A handful of regulars settling in for the evening, and one a busy corner site in a major city, packed with office workers straight from work, a queue at the bar 3 deep. Both are pubs. Both, in this specific decade, are fighting for survival against many of the same broader pressures. But the actual economics underneath each of them are different enough that understanding both side by side tells you considerably more about how this entire industry actually works than looking at either one alone ever could. Let us start with what these two types of pub actually share. Because the shared pressures matter enormously before we get into what genuinely separates them. Both types of pub have spent the better part of 2 decades absorbing a consistent, structural decline in the traditional wet-led drinking trade. The simple business of people coming in purely to drink, driven by several forces hitting the entire industry at once. The smoking ban introduced in 2007 removed a genuine draw for a meaningful share of pub regulars almost overnight. Supermarket and off-license alcohol pricing has grown considerably cheaper relative to pub prices over this same period, making drinking at home a genuinely more attractive financial proposition for a considerable share of the population than it once was. Beer duty. The specific tax levied on alcohol production has risen considerably over recent decades. A direct, ongoing cost pressure passed through the entire supply chain into the price charged at the bar. And business rates, the local property tax levied on commercial premises, have hit pubs particularly hard relative to many other retail categories. Because pub rateable values have historically been calculated partly on trading potential rather than purely on floor space. A genuinely important structural disadvantage the wider hospitality industry has campaigned against for years. Both the village pub and the city pub are fighting these exact same headwinds simultaneously. And national data has tracked a genuinely significant, sustained decline in the total number of pubs trading across the entire country over this period as a direct result. Now, let us start pulling these two apart, because the village pub's core economics are built around a genuinely distinctive structural reality, scarcity of alternatives. In a great many British villages, the pub is not simply one leisure option among several. It is very often the last remaining communal amenity left standing at all. The village shop, the post office, and other traditional rural amenities, having closed in a considerable number of these same communities over recent decades, leaving the pub as genuinely the only place left where residents can gather at all. This gives a surviving village pub a genuinely different relationship with its customer base than any city pub could ever replicate. A considerably smaller total pool of potential customers, often just the population of the village itself and its immediate surrounding area. But a considerably deeper, considerably more loyal, considerably more essential relationship with that smaller pool. Echoing precisely the concentrated regulars dynamic explored in the small town bar breakdown covered elsewhere on this broader catalog, but carrying even greater weight here given how few, if any, alternative venues that same village population actually has left. Now, the flip side of that scarcity value. And it is genuinely severe because when a village pub does close, the loss to that community is considerably more significant than a single business closing on a busy city street ever represents. And this has produced a genuinely important, distinctively British structural response: community ownership. Under provisions established through the Localism Act 2011, local communities can register a valued local asset, including their village pub, as an asset of community value, giving residents a right to bid and a defined window to raise the capital needed to purchase that pub themselves should the existing owner ever decide to sell. And a genuinely significant, growing number of village pubs across the country have transitioned into community ownership through exactly this mechanism: residents pooling capital, frequently structured as a community benefit society, to buy and collectively run the pub as a shared local asset, rather than watching it close entirely or convert into private housing. This represents a genuinely unique structural safety valve the city pub simply has no equivalent to. Because a city pub's loss, while a genuine shame to its own regulars, does not typically threaten to remove the only remaining communal gathering space an entire defined community actually has access to. Now, the tied house system, and this affects both types of pub, but plays out with genuinely different consequences depending on location. A considerable share of British pubs, village and city alike, are not owned outright by the person actually running them day to day. They are operated under a tenancy or lease agreement with a pub company or brewery, the pub co, which owns the freehold and, critically, typically requires the tenant to purchase beer and other products through the pub co at wholesale prices considerably above the open market rate, in exchange for a correspondingly lower rent than a fully free of tie arrangement would carry. This tied model has drawn genuine, sustained criticism and regulatory attention over recent years specifically. Because tenants have reported the combination of above-market wholesale pricing and rent can leave remarkably little actual margin for the person running the pub day to day, regardless of how successful their own trading actually is. A village pub tenant, already working with a considerably smaller potential customer base than any city pub could draw on, is genuinely more exposed to this tied cost structure, squeezing an already thin margin, while a city pub, benefiting from considerably higher raw footfall and volume, has somewhat more capacity to absorb the same tied cost structure and still generate a viable living, even if the underlying arrangement remains identical on paper. Now here is where the naive mental model starts to break down for the city pub specifically. Because you might assume higher footfall automatically means higher profitability. And the city pub's own genuinely distinctive cost structure complicates that assumption considerably. Rent and business rates in a prime city location, particularly anywhere in or near central London, run at a scale that dwarfs almost anything a village pub landlord ever has to contend with. A busy high street or city center site commanding rent that can represent a genuinely enormous fixed monthly cost before a single pint has been poured. And business rates calculated against that same prime location's high rateable value at a further, considerable fixed burden on top of that rent. Staffing costs in major cities, particularly London, run meaningfully higher too, driven by the London living wage and by the simple, competitive reality of needing to pay enough to actually retain staff in a labor market, with considerably more alternative employment options for hospitality workers than a small village typically offers. This means the city pub's considerably higher raw revenue has to first clear a considerably higher fixed cost floor before any of it becomes genuine profit. A mathematics that can leave a busy, genuinely popular city pub operating on a margin not meaningfully more comfortable than a quieter, lower-cost village pub, managing a considerably smaller total revenue base. Now, the customer relationship itself. And this represents perhaps the most genuinely important structural difference between these two types of pub. A city pub's customer base is, in the overwhelming majority of cases, considerably more transient than a village pub's. Office workers who might visit regularly for years while working nearby before moving jobs or moving city entirely. Students who graduate and leave within a few years, tourists and passing trade who may never return at all. This transience means a city pub has to work considerably harder and spend considerably more on ongoing marketing and customer acquisition to continually replace a customer base that naturally churns at a considerably faster rate than a village pub's, where a meaningful share of the regular clientele may have been drinking in exactly the same pub for decades. Precisely the kind of deep, low-churn loyalty explored in the small-town bar breakdown elsewhere on this broader catalog, but intensified further here by the genuine lack of any nearby alternative venue a village resident could easily switch to instead. Now we get to the part of this comparison that actually explains everything else. And it is how each type of pub has adapted its actual trading pattern and its actual revenue mix in response to these genuinely different underlying customer relationships. The village pub has, in a great many well-documented cases, pivoted considerably toward food, the gastropub model, building a genuine, often quite ambitious kitchen operation specifically because food revenue carries a considerably stronger margin than pure drink sales alone. And because a village pub with a genuinely strong food offer can draw diners from a considerably wider catchment area than its purely local, purely drink-focused customer base alone would ever support, turning what might otherwise be a purely local, purely weekend-driven trading pattern into something closer to a genuine dining destination capable of drawing visitors from surrounding towns and, in tourist areas, from considerably further afield. The city pub, by contrast, has generally leaned more heavily into volume and into its specific daily trading rhythm. A considerable share of city pub revenue concentrated into predictable recurring windows, the weekday lunchtime trade, the after-work evening rush immediately following the typical office closing hour, and the considerably higher, more consistent weekday footfall. A city location provides that a village pub, dependent on a genuinely much smaller resident population, simply cannot replicate outside of weekends and specific local events. Now, licensing and operating hours. A genuinely important structural difference between these two environments. City center locations, particularly in areas with a genuine, established nighttime economy, have considerably easier access to extended and late licensing, allowing a city pub to capture meaningfully more revenue across a longer trading day than most village pubs, which typically operate within a considerably more modest, more traditional set of hours reflecting the actual demand pattern of a small resident population that has little reason to be out drinking at 2 a.m. on a Tuesday. This licensing flexibility represents a genuine structural revenue advantage available to the city pub that the village pub's own customer base and its own local character make largely irrelevant to replicate even if the same extended license were available. Now, seasonality. And this cuts in genuinely different directions for each type of pub. A village pub in a genuine tourist area, particularly across popular walking, coastal, or countryside destinations, can see a considerable seasonal surge in trade through the warmer months, echoing precisely the seaside hotel seasonality explored elsewhere on this broader catalog. While a village pub without meaningful tourist draw depends almost entirely on its resident local population, a considerably steadier, if considerably smaller, trading pattern across the year. A city pub, by contrast, typically experiences a more office calendar-driven seasonal pattern, considerably quieter through the traditional summer holiday season as city workers take leave, and considerably quieter again around the Christmas and New Year period once the initial festive rush has passed. A genuinely different seasonal rhythm tied to employment patterns rather than to tourism or weather. There is a structural choice sitting underneath all of this worth understanding for both types of pub. And it is the decision between remaining tied to a pubco or securing a free-of-tie arrangement. Whether through outright freehold ownership or a genuinely free-of-tie lease, a free-of-tie pub can purchase its beer and other stock on the open market at considerably more competitive wholesale pricing than a tied arrangement typically allows. A genuine margin advantage that matters proportionally more to a village pub working with a smaller overall revenue base than it does to a high-volume city pub, with more capacity to absorb the tied cost structure regardless. Meaning the specific decision of whether to remain tied or to pursue free-of-tie status carries genuinely different strategic weight depending on which type of pub and which type of underlying trading volume is actually making that decision. There is also a wrinkle worth understanding around drink driving enforcement and its genuinely disproportionate impact on rural pubs specifically. A city pub's customer base can, in the overwhelming majority of cases, walk home, take public transport, or use a taxi or rideshare service without needing to drive at all. Meaning, strict drink driving enforcement carries relatively little direct impact on a typical city pub's core trading pattern. A village pub, by stark contrast, frequently serves a customer base with genuinely limited transport alternatives, poor or non-existent public transport connections common across a great many rural areas. Meaning, a meaningful share of village pub customers have historically depended on driving to and from the pub themselves, a pattern that stricter drink driving enforcement and broader cultural shifts away from drink driving over recent decades have genuinely and disproportionately suppressed specifically for rural pubs. A structural headwind the city pub's own customer base largely does not have to contend with at all. Now, here is where the financial fragility of both types of pub becomes just as important as either a packed city bar on a Friday evening or a warm, quiet village local on any given weeknight actually looks. Why do both types of pub, despite facing genuinely different customer relationships and genuinely different cost structures, still show up so consistently in the same national closure statistics? The pattern is structural, and it applies to both, even as the specific mechanism differs. The village pub depends on a genuinely small, genuinely irreplaceable customer base, meaning the loss of even a modest number of regulars. Through death, through relocation, through a younger generation simply not adopting the same pub-going habit as their parents, can meaningfully threaten the entire business's viability with very little room to recover through new customer acquisition, given how small the surrounding population actually is. The city pub depends on considerably higher, more resilient overall footfall, but carries a considerably higher fixed cost floor in rent, rates, and staffing that has to be cleared before any of that higher revenue becomes genuine profit. Meaning, a meaningful downturn in footfall. Whether from a shift toward remote working reducing weekday office trade, or from genuinely intense direct competition given how many alternative venues typically surround any single city pub, can erode margin considerably faster than the same percentage decline would threaten a lower cost, lower overhead village pub. So how do these two pubs actually make money in plain mechanical terms once you strip away both the quiet village local image and the bustling city corner site image? The village pub's core engine is a genuinely loyal, if genuinely small, base of regular drink spend, increasingly supplemented by food revenue drawing custom from beyond the immediate village itself, against a comparatively low, though still often tied, rent and cost base. requiring relatively modest total revenue to clear that lower fixed cost floor, but leaving very little room for error given how small and how essential every single regular customer actually is to the total picture. The City Pub's core engine is considerably higher volume drink and food revenue, drawn from a considerably larger but considerably more transient customer base, against a considerably higher rent, rates, and staffing cost floor, requiring genuinely substantial total revenue simply to break even before any of that volume converts into real, durable profit. Now let us put all of this together and look at what actually happens across the different versions of both of these stories, because this is where the genuinely different paths to survival reveal themselves. In the more resilient version of the Village Pub story, the pub has built a genuine food destination reputation, drawing custom from well beyond its own small resident population, or has transitioned into community ownership, giving it a considerably more patient, considerably more locally invested ownership structure than a purely commercial tenancy would ever provide. In the more resilient version of the City Pub story, the pub has secured a free-of-tie arrangement or outright freehold ownership that protects its margin against the tied cost structure and has built a genuinely loyal core clientele. Regulars from nearby offices or the immediate neighborhood, resilient enough to anchor the business through quieter periods rather than depending purely on unpredictable passing trade. In the harder version of either story, the Village Pub loses its last handful of essential regulars with no realistic way to replace them from such a small surrounding population, while the City Pub finds its considerably higher fixed costs no longer covered once footfall softens, whether from changing work patterns or from simply losing out to one too many nearby competitors. A genuinely different mechanism, arriving, all too often, at the exact same closed door. So whether you are looking at the quiet stone pub at the center of an English village or the busy corner site on a major city high street, remember the one thing that actually determines whether either one survives. It was never really about which one pulls a bigger crowd on any single night. It is about whether the specific relationship each pub has built with its own specific customer base, small and irreplaceable in the village, larger but considerably more transient in the city, is strong enough to carry it through exactly the kind of quiet Tuesday that never makes it into anyone's story about the pub at all. If this kind of breakdown helps you see a business differently, that is exactly what this channel is built around. Subscribe to Money Framework British for more deep dives into how everyday businesses really make their money behind the scenes, and turn on notifications so you never miss the next one.